Welcome back. Let's get a sense of what's going on in the domestic commodities market. Now I'm talking about domestic agri-commodities with Opeyemi Oguntade, who is a senior analyst with, senior economic research analyst with financial derivatives company. Opeyemi, good morning to you and thank you for joining me again this week.
Good morning, Harriet.
So what has changed since the last time we had conversations? What are the key highlights of today's report?
Well, the first thing on the report is the fact that we're now transporting tomatoes from Kano to Lagos. This is the first time this is happening in about 58 years, so almost like 6 decades. And this is relatively good news, although it's taking like over a day for the products to get here. But in the past, we've seen that it takes a couple of days via road, and you have bad road systems. So some of these tomatoes do not make it to the point of sale, and some of them do make it, but by the time they get there, it's kind of dented.
It's not as fresh.
It's not as fresh, exactly. So, but having this development with the rail network system, it's a good improvement for the domestic commodities market. And if this is consistent, if they carry on with this initiative, we should see that the issues we have with transport costs when it comes to domestic commodities would be resolved over time, and we should see that filtering into the price of domestic commodities. Another recent development we've seen this morning is that the president has approved the bill of 22 billion naira for fertilizer subsidy to the agro dealers. So they'll be getting it at about 5,500 for a bag, and the federal government is still going ahead to say want to push this down 50% further. And if they're able to do that, that would feed into the fact that you'll be able to produce more. Farmers will be able to produce more, yields will be higher, and obviously if supply is higher, we'll see that filtering into prices as well. So for the agri-commodities this week, the highlights we've seen are pretty good. It's just that we're still in the planting season, and we do not expect that to happen like in the near term. We're looking at about 3 months, 6 months lag before we see an actual impact of this recent development.
So it's not like if you go to the market now, for instance, you'll be able to get a basket of tomatoes at, let's say, anything below 10,000 naira. It's still above 10,000 naira.
Yeah, you still, obviously there's the inventory turnover issue. You have like, 2 months inventory turnover. You have to turn over what you've already bought before. And if you buy it at this price, you don't want to, undercut yourself and sell it at a loss. So you probably wouldn't see prices coming down to maybe say, let's give it like, a week, 2 weeks before we see that having an impact on tomato prices.
So talk to us about other developments, especially with regards to prices of some of those commodities that, even though have a lot of international, pricing, affect us locally. Talking about the price of sugar, talking about wheat now. Globally, and according to reports from FDC, we still see wheat futures up about 1.26%.
Yes.
Corn is also up, cocoa is up, and so is the price of sugar.
Yeah, all of them went up this week. And if we're looking at wheat and corn, the reason why we're seeing the increase in prices is because of investors' response to the report by the USDA, which they showed that they expect yields to go down marginally compared to their previous projections. And then for cocoa and sugar as well, it's a case of production consumption dynamics. For sugar, we're seeing that we expect consumption to accelerate soon as the summer season approaches, and most of the industry buyers have to buy in bulk to meet demand.
But then your outlook, you say you're quite bullish on outlook for grains due to grain demand and lower production estimates.
Yeah, exactly, which is what I just said. The USDA report mentioned that the report showed that their production estimates was lower compared to the previous month, and that's feeding into the upsurge we're seeing in wheat futures. So in the near term, for the rest of the week, I expect wheat prices to, still maintain that bullish trend. But next week, there could be another report that suggests that, production, because at the end of the day, agricultural commodities are kind of highly dependent on the weather dynamics as well as supply-demand dynamics. So if there's any change in the data, then we'll probably see it change the direction. But for now, for the rest of the week, we expect wheat futures and other corn futures as well to maintain the bullish trend.
So aside from the corn and the wheat futures, what other commodity are you expecting to start a trend that might excite you and your other colleagues at FDC?
Okay, so if we're looking at the oil market for one, we've seen that the U.S. Fed decided to increase interest rates to by 25 basis points, and now the target range is between 0.75 to 1%. And we know that, you know, whenever there's an issue with the, you know, US Fed rate, it usually has an impact on the strength of the dollar. And you know, oil is, you know, it's a dollar-denominated commodity. So in the short term, this would probably affect, you know, the direction of oil prices, but we do not expect it to be so significant to lead to a cause for, you know, a worry for Nigerians, because as at now we're still seeing it at $52. But then another development would be the rig count data, which is due to come out, you know, tomorrow afternoon by from Baker Hughes, and so far so good. So far we've seen that, you know, rig count in the past week has been going up consistently, but although we saw that crude inventory data this week went down by over 200,000 barrels, so that's really good news, because the US has been, you know, the crude inventory data from the US for 9 consecutive weeks was, you know, it was going through the roof, and we're worried that, okay, the OPEC deal might not be, you know, might not prove to be useful, because the US is, I mean, they've been resilient in production, but we're hoping that oil would maintain prices at above $50 per barrel.
All right, Opeyemi, thank you so much for coming on the program this morning, and of course sharing highlights from FDC's latest report on the commodities. Opeyemi Oguntade is a senior economic research analyst with Financial Derivatives Company.